All right, everyone, welcome to another episode of Line Your Own Pockets. We have a very special guest today with Marsten Parker, who is the creator of the Real Test software and a market wizard. That's a big deal to be into. I love those book series. So it's a huge, huge honor. 2 episodes ago, we talked about all the different backtesting platforms that we used. I mentioned that I kind of exclusively right now use Real Test, which is Marsten's product. So I think this is going to be a great episode to kind of get you started and learn about how someone who builds these programs thinks and how someone who is a systematic trader and again a market wizard thinks. So high level introduction, but for anyone who's just hearing about you for the first time, just hasn't come across the name before, Marsten, can you tell us just a little bit about yourself?
Sure, I'll keep it brief, but yeah, I originally was pursuing a career as a classical violinist, but I was also a self-taught programmer since high school. Um,
Mhm.
Once I figured out I wasn't going to be the next Yasha Heifetz, I moved back to the Boston area where I grew up and managed to get a job as a coder. Worked for a couple different startups. Then by the mid 90s, one that I was an early employer of went public, Segway Software. And that's the one that Jim Simons was the chairman of. And
Yeah.
that left me with some the problem of having capital that I had to figure out how to invest and an interest in the stock market, which were both first time events for me. Um, for some reason that I'm still trying to understand, about a year later, end of '97, I decided to actually leave that company and focus full time on trading, and hence the title of my chapter in the book. Um,
Yeah.
and as it happened, I did well. The results were good, but I was supporting my family with that, so I didn't compound any wealth, but I produced really good stats that were good enough for Jack. So I ended up in the book, and yeah, but then about 15 years later, I had a coincidence of a really serious drawdown coinciding with some very unusual expenses, um, due to family health and house maintenance issues, and sort of a perfect storm.
Mm.
Uh, so that left me with trying to figure out what to do, and I ended up, it wasn't like near bankruptcy or anything, but it wasn't going to work to just trade for a living. So after trying a few ideas, I said, well, I have this software that I've been using myself and had a few people using it for decades, and why don't I overhaul it and see if there's a market for it, and given and that was actually like 2017, and then coincidentally, the somebody, Mark Ritchie, the second, contacted me because he was trying to help find people for the book, and someone had given him my name, and Jack talked to me and decided to include me, and so that helped with the publicity for Real Test, gave me the
I'd imagine. Yeah.
confidence to really put it out there, and so been marketing it since the start of 2021. And I'm really enjoying it. I was a software developer before, and like any developer, I'm motivated by being able to build things that people like to use, and that are useful for other people. And I'm just enjoying the support aspect as well as it feels like a collaborative effort where there's a really nice community. We're up to about 800 users that are
Wow.
that all contribute to the product. In terms of ideas and priorities, I just happen to do all the coding and documentation and support. But so 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 yeah, here I am, and I actually have not been trading since June. Uh, the four strategies I had been running that did spectacularly well in 2020 and 2021, but that isn't saying anything because just about anything did so.
Mm.
Um, uh, Kind of ran out of gas in 2022, and they just went flat. I think that the edge just went out. I didn't have a drawdown; they just went flat. So at some point, I thought, well, I'm just not going to keep putting risk on. So uh, and yeah, so that's where I'm at that with that. At some point, I expect to get back into it and come up with some new strategies. But I feel like so much has changed in the market that it's hard to even know what period is relevant for back testing and so on.
Yeah.
Uh, it's also hard to find time to do the strategy research when I'm a one person full time software business.
So, Marsten, that's a great overview of your career. I want to go back to actually the very beginning when you started trading. And, a lot of people that come to me, they have been successful in another area of their career, like maybe completely different from trading. So they come to trading and they have a sense that they're going to be really good at it or it's not going to take a lot of time. And then all of a sudden they see this, that it's harder than they think, right?
Yeah.
Did you have a moment like that being a, high level musician at the time, coming to this field that, did you have confidence? Were you able to get over a hump? Was there any part of that process that you remember?
Um, well, at the beginning, I just kind of I opened up my first brokerage account and uh, got my restricted shares, unrestricted and transferred over there, and so then I had some capital, and I started, watching some stocks and trying things almost at random, and started to read trading books and so on. I didn't have a goal of becoming a trader at all, so I didn't have any preconception that I would do well at it or that I would fail at it. It just was kind of a very present centered, oh, I seem to be interested in this, and it sort of dabbled in it. By the end of 1997, when I left my job, I had really mostly just done ad hoc discretionary trades, and I had lost about 50 grand. Uh, and on that basis, I thought, oh, I might as well. But I had kind of turned the corner of saying, I need to make this systematic. That's the only thing that's going to work for me. And I had met a guy named Gary B. Smith online who was writing about a systematic approach to trading that was working for him, and I was corresponding with him a lot, and decided to just adopt that approach, and we basically became trading partners. So I had a kind of a plan. So I guess I had confidence at that point based on the fact that I had met someone who was currently successful and was willing to work with me. Um, so
Well, I think that brings up a good point with Gary, that networking is something that, me and Dave talked about before, and it's, I think it's super important because everyone kind of looks at the market from a different lens and a different spectrum. Do you do any of that now with, you said you weren't trading recently, but um, I, for one, I don't post much on the Real Test forums, but I'm on there all the time. I get the email, I think once a day, that says, here's everything you missed. And I usually go and read through that. Do you find that helpful at all, that you have now, you said 800 users, but you've got dozens of people in there talking about, different strategies you're going to try, and they're going to be all different experience types. There's going to be some who are going to be really advanced when it comes to this, and some that are brand new. Do you ever get any idea or inspiration from just kind of reading your own forums at this point?
Oh, a lot. I mean, if anything, it's too much information because I mean, of course, I don't know what most people's strategies are. I mean, Realtest is a piece of desktop software where your files are on your own computer, so I don't have access to user scripts, obviously.
Hmm.
But a number of users share things with me or send me things or whatever, and I listen to a bunch of trading podcasts, and I mean I'm exposed to the fire hose of information that we all are.
Yeah.
So there's definitely no lack of ideas. It's sort of like what to focus on. I mean, but and part of it with me is my own psychology has always been. I think I'm somewhere between the two of you, just as I am on this screen, uh, where I've I've I'm not a day trader, but I've never liked to hold a position for more than a week. So I've been just happiest in that sort of 1 to 5 day time frame, and it's probably because that's what Gary Smith's strategy used, and so that's how I traded for my first few years of success. So it probably just got embedded in me as this is what I need to do. So that's the main way I tend to limit myself, is that, I have to find strategies that work on this time frame. I've just never been able to get my mind around, like classic trend following,
Mm.
or anything with a 0.5 MAR ratio, for example. Like, I just don't see how people tolerate that. But so that's kind of where I'm at with that.
Yeah. So Marston, you mentioned that there's you get a fire hose of ideas. I think a lot of traders they find something that works, and then they kind of get stuck with the one strategy. And
That was me. Yeah.
I've always said that the only thing harder than coming up with one strategy is coming up with the second strategy. So,
Right.
and it's a little ironic because, like you said, there are a lot of ideas you can work on. It seems like we're inundated with ideas. So I like what you said about, restricting it to a certain subset of ideas that will work for you. Do you have any other advice for figuring out what strategies to work on, given you got a whole bunch of ideas that might work, but they're each are going to have, require a lot of your time to dig deep and figure out what to do? Do you have any ideas for prioritizing ideas and, figuring out what to work on next?
Not really, because my personal approach has always been kind of ad hoc. And that's part of why real test is the way it is. It emphasizes a very rapid feedback loop where it's, I worked hard to make back tests run as fast as possible in it. And always, from the beginning, I've always, I should mention it, focused on, I'm trying to back test and trade a model where every day you scan the entire stock market for some trading signal or whatever trading rules. And so there's a fairly large amount of data involved. So but so basically just sitting in front of a tool like that and iteratively trying stuff. Um,
Mm.
Sometimes what I try would come from an idea, but for, mostly, like you said earlier about people get stuck on one approach, and that was
Yeah.
certainly me. I had this long short breakout strategy that had mostly worked for more than 10 years, and it I was aware of I was kind of vaguely aware there was this thing called mean reversion, and I played with it a little, but I just didn't like the feeling of it, the catching a falling knife thing. So, but I finally, when the other systems clearly weren't had lost their edge, I dug deeper into mean reversion and convinced myself it would work, and initially had really good results with it. Too good, because then I sized it up too much, and that was what led to the big drawdown. But so basically, I've only ever used to, well, no, I there was a third idea, which was recent IPOs that came a
Mm.
little later. So I basically only ever used three ideas in all my trading:
Well, the
short-term breakouts and breakdowns, short-term mean reversion, and
yeah,
trading recent IPOs at their all-time highs.
and while we're talking about multiple systems, right? That was the thing that gravitated me to real test. I actually heard about it from the Chartist. I think Nick
Yeah.
Raj. He mentioned, because I had been following him for a while, and I really liked his concept of these are a bunch of different strategies that I combine, and that's where my edge is now. In the book that I just finished again listening to, had you mentioned that your goal would be, if you were back doing this and doing it full time, is essentially four strategies, right? Two trend following, maybe two mean reversion, something like that. And it's something that I think I focus on a lot, and I think has really really helped my trading, is this multiple strategies approach. But in your testing and in your support and everything with the software, have do you have any idea of how many strategies you think is optimal? Have you done any looking at that? Like, do you know clients that are running 20 strategies versus five versus, like, is there ever a point where it's kind of too many, assuming you have the buying power to trade them all?
I've seen the whole range of, the whole spectrum. On one end, you have one strategy on one symbol, and
Yeah.
although I don't see that too much in real test, because it's, if you're just trading one symbol, you don't really need what it can do. But to I think maybe it was more to test the software, but I've seen someone get over 100. It gets pretty slow at that point.
I'd imagine.
But yeah, I've seen people who like to have kind of 20 or 30. I mean, it's typically not there aren't 20 or 30 different trading ideas. It's more like variations of the same strategy so that you make them more robust with respect to parameters. Um,
So,
but
so, so you kind of mean like, so someone, if they had a trend following strategy, they may look at a 10-day breakout and a 20-day breakout and a 30 and just test those as different strategies just to see what would happen
yeah,
there. Yeah.
right, or include them all as different strategies. Yeah, I have an example like that does trend following on the S&P 100 constituents with three different look back lengths, and you can clearly see how uh, just that amount of diversification, and also adding the constraint that they can all trade the same symbol,
Mm.
uh, really helps. Because we all know sometimes market cycles are longer and sometimes they're shorter, and so that way you're kind of covering all cases. And I know that's quite common among trend following traders, to do
So
it
Markets like,
that
there's
way.
a
yeah.
But I like with the four that you mentioned. I like the idea. I think of it as a sort of a 2x2 grid where you have long and short on one axis and mean reversion and breakout on the other, and that kind of really covers but all the bases, at least, except that, as I mentioned, I limit myself to the same kind of time frame for all of them, at least for now. I have experimented with adding like monthly Nasdaq 100 rotation, or that S&P trend following example that I talked about, or other things like that, which can but then you get into the question of capital usage.
Yeah.
Like that with shorter term things, you can combine four short term strategies that are each using 100% of your capital, especially if all of them are rarely fully invested. They're all the type of strategy that is opportunistic. Um,
Yes.
you know, it,
Yeah.
it it takes an unusual market. Basically, it takes a crash for example, for a long mean reversion strategy to get all of its entries at once.
Yeah.
Uh, Given that, I mean, with mean reversion, it's kind of like the more extreme pullback you're looking for, the better the expectancy, but the fewer the entries. So you're always kind of looking for the knee of the curve of quality versus quantity uh, on the trade count. And
That becomes hard. Yeah.
so,
And,
but
and,
but
and,
if
and
but
very
but when you
personal
combine it
too.
with other things, that becomes an advantage if it doesn't trade so frequently, because then you can use that capacity for other strategies. But when you start putting in longer term buy and holdish things, they just are consuming capital. Now, the one probable or possible next direction I want to go in is adding futures trend following to shorter term stock trading, because that would be a really efficient use of capital.
Yeah. That's a very Jerry Parker esque with the future trend following.
Well, he does stock trend following in futures. He's
Yeah.
T trend following plus nothing, right?
Yeah. That's his whole motto.
Yeah.
So one of my favorite quotes is, "If you torture your data hard enough, it'll confess to anything." So
Yeah.
how do you ride that line between knowing whether you've tortured your data too much, you tortured your strategy too much, versus optimizing? How do you think about that, and how have you addressed that over the years?
Um, well, in the early years, including some of my most successful years, I really had no clue about over optimization. I mean, I literally was quite guilty of using too many parameters and over optimizing them. I mean, it was all within the same strategy concept of short term breakouts, but like there's a target percent and a stop percent and a time stop, and how much does it have to move today to be considered a breakout, and what's the how many times over average does volume have to be and so on. It's easy to come up with 10 parameters, and I would optimize all of them. and I would tend to leave them alone until I got into a fairly good sized drawdown, like maybe 10%, and then I would uh, and I had a rule to stop trading if I hit 20%, and then I would re-optimize. Okay, how could I have avoided that drawdown? And then I would start again. And and at any given time, like from 1998 through 2010 or so, I was running strategies where the back test said something like 100% return and a 10% max drawdown, and I was
That'd be
actually
nice.
getting more like 20% return and a 20% max drawdown, or 25. So during those years, I actually averaged like 27 a year. But anyway, and I just kind of thought that's how it worked. I was fine with that. I just learned through experience that your actual results are not going to be anything like your backtest results. And I'm like, okay, fine. But I still thought, I was aware of that problem, but I still thought, I mean, would I rather be running a strategy with better backtest results or one with worse backtest results? It made more sense to me to run the one with better results, so that's what I did. Um, and I would do a fair amount of not too much, but sometimes, the thing that I know you've talked about, Dave, of looking at individual trades as a way to try to refine your rules. Uh, you know, how could you have filtered out not one bad trade? I mean, that's ludicrous, but
Yeah.
how could you have improved your stats?
Well, and I think that comes to
But let me just finish that thought.
yeah.
In more recent years, though, I've really moved away from that. At some point, I just became too self conscious that approach didn't really make sense, and I started. First of all, I limited my parameter granularity. So I would just say, gave myself a bias of like whole number parameters, or you
Hmm.
know, or like if I was going to optimize, I could only pick 3 or 5 values or something. Um, and so that's kind of how I went. I mean, because you have to do some amount of, because part of what you're doing is discovering the nature of the market,
Yeah.
and part of what you're doing is curve fitting to bad data, to past data.
Well, and that becomes a lot of the, one place, even for someone who's fully systematic like yourself and fully systematic like Dave, where I'm not quite there. I'm still semi-discretionary, but a lot of that discretion comes into what do you curve fit and when, right? That becomes something that,
Right.
I think that the human still has a very important job on, because you're right. If you take, especially in real tests, you can just run an optimizer and it says, hey, you should be using a 34.5 moving average. And then it takes the human to look at it and say, well, why, right? Why does, not the 20 or the 50 or, why do these whole numbers don't work when this one random value does? So I think that's just an important something to mention to the audience, right? Is yes, optimization can be useful when you're doing it from kind of an exploratory nature of, uh, for example, do I want to trade more volatile stocks or less volatile, or does this work better on more expensive stocks or cheaper stocks? But when you find that there's just one piece of data that just pops out and says, "Oh yeah, this random assortment of indicators ends up working," where if I move the indicators kind of one tick down or one tick up on a numerical scale, then all of a sudden everything breaks, right? So that's I think a great level to make sure. Um, that you're doing that with some sort of discretion, even if you're not going to add any discretion to your trading. But that was one question I wanted to ask, because you went from kind of fully discretionary to just right off the deep end and said, I'm going to be fully kind of systematic forever. Are you ever tempted to kind of come back a little bit and use systems to help find the entries and using that back test, but using just a little bit of technical analysis or anything like that for trade decision?
Not recently. Yeah, I mean, my but when I was just trading completely ad hoc discretionary, I proved to myself fairly quickly that was stupid. And then I met Gary, and our approach was kind of semi. It was mostly systematic, I would say, but we had one discretionary step of reviewing the charts for our entries, but then the exits were completely systematic.
Yeah.
And the entries, there was a scan and that produced fairly few candidates, so that part was also systematic, semi-systematic. But I would never try to write a fitness function that produces a number, a score, and say whatever parameters have the best score, I automatically use those. So I've never been kind of a pure quant in that sense. I'm 100% mechanical trader and a pretty much discretionary uh, researcher. So I'm a big believer. Like even if you run an optimization, the next step is to. That's right. Real Test shows all the tests in a nice window where you can double click on a row to see the equity graph, and then just hit the down arrow to go through them, uh, and you get a feel for that uh, beyond the stats by
Yeah.
looking at different graphs and uh, of the tests, uh, and on that basis, you kind of choose just the parameters that feel the most reasonable and sensible to you.
Yeah, and
Um,
I know Dave's probably itching for a question, but I did want to hit on that. I love that quote of "I'm a researcher." I think so many traders try to look at themselves as I'm someone who I'm going to hit a button and hopefully make money, and they don't look at themselves as that idea of when I'm back testing systems, when I'm optimizing systems, that's the kind of hat or mind frame that they should get into. Is I'm researching the market, like you mentioned. I'm studying the market. I'm trying to figure out how the market moves in response to XYZ stimuli, the same as anyone would do from any sort of scientific endeavor. So I did just want to hit on that because I thought that was a great way to kind of reframe yourself, and I think that would help a lot of people if they just go in and say, "Hey, I'm researching if X happens, does Y happen more often than not?"
Totally. I've actually never really identified as a trader. I yeah, I design trading strategies uh, because that's how I want to approach investing, is with short-term trading strategies.
So do you when you evaluate ideas, or when you had evaluated ideas, is there some sort of minimum threshold that you looked at before you thought, okay, yeah, this one is worth looking at further and doing more research on it? Do you ever remember any sort of rules of thumb that you had for yourself for whether an idea was worth looking at further?
Yeah, I would say. I mean, first of all, it has to be pretty simple. I'm pretty skeptical of really complicated indicators and stuff. The and in terms of stats, typically I mean, I'm generally just kind of looking at the rate of return and the drawdowns and the expectancies. And I have there's a kind of a ballpark area that I'm looking for, or have been typically, which although it's getting harder to find, which is rate of return over 20%, max drawdown under 20%. So MAR ratio of greater than one,
Mhm.
um, and expectancy high enough so that you don't have to worry about execution too much. So like I don't know, 0.5% expectancy or higher or something like that on a per trade basis. There's one rabbit hole that many people go down with systematic research is the illusion of the very high trade count strategy, very short term, very high trade count, without factoring in slippage or whether all your limit orders are going to get hit. And you can see some ridiculous looking stats and equity curves. And when you try it in real life, it definitely doesn't work.
Yeah, that's a lot of traders will do back testing, come upon something that looks great, and then they feel like they're done, right? But that really they don't realize the work starts once you start making trades and like figuring out how it compares to the back test. Now,
Exactly.
I was struck with your back test strategy show 100% gains, and then you were uh, expecting 20% eventually once you had some experience in dealing with it. Um, do you feel like that's a good expected return when comparing the back test to real life. And I know that's something that a lot of traders will sort of all of a sudden they blame the back tester, like, man, this back tester sucks, right? Because it doesn't reflect reality. Surely you get some of that feedback. And how do you uh, coach people through that process of figuring out reality versus theory?
Well, my usual rule of thumb, I mean, that 100% was kind of extreme. And that was partly because that was like back in the late 90s, early 2000s, where it was very easy to find a strategy with stats like that. Now it's pretty hard to even hit like 30%. But my old rule of thumb was just expect half the return and twice the drawdown. And so, if you can only tolerate a 20% drawdown in live trading, then probably don't trade a system that thinks it'll be more than 10. But it depends on the kind of strategy. There's an important distinction there to look at, which is, I mean, there's out of sample results versus in sample results. In other words, what your live trading going forward is compared to what the backtest was before you started. That's the thing where I said, twice the drawdown and half the return. But then there's also, for the period you've been live trading, you've got to run the backtest, and that should be pretty close. I mean, if that's not close, then there's a flaw in your backtesting software or a flaw in your executions, or you didn't account for enough slippage or whatever. So that those are two separate metrics that have to be considered.
Now, when you mentioned a lot in the chapter in the book too, that, and we talked a little bit about here, that sometimes you had strategies, they worked fantastically, and then all of a sudden the edge disappeared, and you were left kind of looking for that next thing. This is something that I'm always trying to figure out an answer for, and I'm sure there's not a perfectly correct one, so we'll have to just pontificate a bit. But what are your suggestions to someone who is a systematic trader, who is kind of going through this on trying to identify what is kind of a normal drawdown for a system versus maybe an extended drawdown for the system versus this just isn't working anymore, and I've got to go do something else?
Yeah, that is the big question. The name conference that I recently spoke at, we had a panel on that, and nobody had a really clear answer. But I mean, it's sort of a judgment call. I mean, some of the things I would say are you have to have some concept of what the source of your edge is, like why your strategy worked. And so the first thing to check is, might that have changed? And back in 2005, when that was the most dramatic example from the book, where the end of day entries, my edge just seemed to fail, and my usual approach of re-optimizing and finding something that would have worked better, I couldn't find any parameters that would have worked. So I kind of and it had been going on for a while like that. So I kind of concluded that didn't work anymore. And then there, if there's an external thing you can incorporate, like I was talking to some people who knew somebody who knew like an institutional trader who worked for a mutual fund and was telling him about these new algorithmic execution platforms that they had. So they no longer had to do big block trades. They could cut them up into little pieces and be much smarter about that. And so like, okay, that was a big part of my edge. You always, I mean, all edges are like being slightly earlier than somebody else who's trading larger than you. That's the only way to make money in the market. I used to like to say the only edge is being early. So if you can identify that you're no longer early, that's a very good reason to stop a strategy. I mean, or another, like now my IPO strategy stopped working for obvious reasons. That's an easy one. There aren't any IPOs, and
they're all
getting
bad. Yeah.
I mean, right, they're getting faded more. I mean, the fact that IPOs dry up in a bear market was a feature of the strategy, not a bug, because it was kind of like a built-in regime filter.
Mm-hmm.
But but I don't know what's going on now. I mean, maybe it'll come back at some point. I check them periodically to see how they're
Well,
doing. And then the weirdest thing is that strategy that failed in 2005, which there's kind of a version of it in the real test examples folder called MHP Classic, and it suddenly started working in 2022 when all my others failed. So,
well, yeah, that was
so
actually going to lead that leads me perfectly to my follow-up question of if a strategy dies or loses its edge, and I probably already answered that already. You don't just delete it and move on and never check it again. Like, do you have some sort of process to say, hey, maybe once every few months I should dig up the old strategies that I killed and just see maybe they're coming back to life in some way? And have you ever kind of brought any back from the dead like that idea that's kind of come back? If that continues to perform for a number of months or years or something, do you ever consider dipping your toe back in it?
yeah, I do. Yeah, I'm actually running now in a paper account a version of that old long short strategy with smarter position sizing rules than I used to use, and in combination with a long short meaner version. So that gives me my 2x2 grid that I like, and it's the expectancy is a little low for my taste, but it looks promising. We'll see how it goes. Oh, I should just mention that I don't think running. I think the main use of an IB paper account is to make sure your automation works, because it does not give you a reliable sense of execution at all. If anything, if you get good stats in an IB paper account with short-term trading, you'll probably do better in live because their execution modeling is very poor. You basically have to wait for actual trades in the market, with sufficient volume at your price before they say you're filled. So it's not like you're participating in the market. But anyway,
It's
that's
probably
a
probably
side.
better that way than the other way around. I would
Right,
guess, right? Yeah.
right.
Yeah, that's true. I've experienced that same thing.
Yeah.
So one thing I'm struck by in just this whole conversation is, here we are talking about automated trading. We're two developers. We're used to writing code, if this, then that. And yet, a lot of what we're talking about here is discretionary decisions in the research process, or whether to turn strategies off, whether to turn them back on. I think people will be surprised to see just how much discretion there is with fully automated trading. Um,
You mean I just
I,
don't go to the beach and and then take naps all day and make $1 million? That's not the way it works.
Right, believe it or
That's what I was
not,
promised.
that's not how it works. So,
Yeah.
as a developer yourself, did you set out, and you said you went to automation pretty quickly. Did you think that, hey, I'm going to have this completely automated where there's no hardly discretion at all, or did you have, and did you, tell me more about how your thought process there over the years?
Um, well, the first thing I automated a little was kind of collecting stats, because from the beginning it's probably part of why I succeeded is I had an instinct to always be very accurate with recording my stats and review them, um, and try to learn from them. And then when I was doing manual order entry, I realized I would make errors a little too often, and so I mean that's the most
Mhm.
logical next step with automation is to just do the orders. But I never had a goal of. I mean, some people who are attracted to algorithmic trading have a goal of they're going to build a perfect system and turn it on, and then kind of come back in a year and be rich. Um, and that to me has never made any sense. And I know that even in like big quant hedge funds, there are staff who are sitting there watching the thing and supervising it, and
Mhm.
you're and intervening sometimes. Not often, but sometimes. There's always a level of discretion in this. So each person has to find the right balance. I mean, I'm aware of some real test users uh, who are much more automated. They're like content to have something running, and they won't even check it like all week, but it'll email them if there's an issue. That sort of thing. I've always liked the manual process of like clicking a few buttons every day. Like I like to manually tell Norgate to update my data, and then manually tell Realtest to generate my orders, and then take a quick glance at them, and then manually press the start button on the automation app, and
Yeah,
watch it a little to make sure it's doing the right thing. And but there have certainly been times when I've been unable to be at my desk at that time or whatever, and then I might set it up to run automatically. But I prefer to kind of be involved a little bit. But
yeah, there is.
if it takes only 10 minutes a day, that's fine. That's good.
Yeah, there is. I agree. There's value in, like, there's some parts of my process I could automate. They could be completely automated. Like writing to my journal and keeping exact stats of each trade could automatically be done. But I do value doing that after each day, entering the trades. Not quite in an automated fashion, but it's something I have to do, and I have to see it and watch those stats coming in and assign the strategy to the trade. So yeah, there's a lot of value in that. I totally agree. Um, so here's a question that you know um, Chat GPT is on the scene. It's been around for, seems like it's been a long time, but it's only been a few months now, actually.
Yeah.
Have you worked that into your development process or any of your trading process at all yet? And how do you think about the Chat GPT and just LLMs in general?
Yeah, I use ChatGPT and also Claude fairly frequently. Not for like, you know, very big things. I mean, I use it to try to save me time. Like I tend to use it instead of Google a lot nowadays. Or,
Mm.
Yeah.
I mean, I've used it for some development tasks that aren't on Realtest itself, but like write Python code that talks to these various APIs, like that FastSpring uses for my sales and Lime LM uses for my license management and blah blah blah. Integrate all these. It's a huge time saver, and as opposed to having to look up and learn all these different REST APIs and write the code for them. Yeah, especially if you want to write some Python, and like I'm still not super fluent in Python, and I had a batch script example in Realtest of how to automate something in PowerShell, and I just told ChatGPT to translate it to Python, and that worked well. Um, so stuff like that, just looking things up, getting information. Oh, and also, like recently, I've been working on making sure my support for trading futures where the currency is different from your base currency uh, is
Mhm.
done and accounted for correctly, which is a little complicated. So I'll ask it to work through the accounting of a trade like that, or even to just like look up, what's the tick size and point value of Nikkei futures in yen, uh,
Yeah.
stuff like that, rather than having to try to find the exchange website or whatever. So that's the level at which I'm using it. I'm not using it for like, find me, give me a new trading idea or things like that.
No, and I think I've already put this in the show notes of one episode, but I'll put it in the show notes of this one as well because I've created my own real test GPT where I fed it the user guide, downloaded the user guide in PDF, and I uploaded it there. And as someone who's not a coder and not a developer myself, I've found it hugely beneficial because as someone who's played with a lot of the back testers, I settled on real test for a couple of reasons, but one of it was simpler for, again, someone like me who's not as savvy as you guys. But I find it does an amazing job for us laymen getting us unstuck. I don't know how many times I've just taken my real test code and just paste it in there and go, what did I do wrong? There was one time where the results just looked too good and I couldn't figure out what I did wrong. And I was like, there's no way this thing's going to make what it actually is. And I just pasted it in and I said, what's going on here? And I had some look ahead bias in the code. So it was
Oh,
basically looking at the next, and it was able to identify that, yeah, you're looking ahead at the next bar. So, in the real world, you'll never get this. And I just thought that was a huge moment for me, where it's like, yeah, as opposed to someone who's, a layman and maybe in coding and in trading, and would see the results that I got, which again was like 250% a year with like a 5% max drawdown. So someone who's really new could say, oh, well, I just hacked the matrix, I figured it out, instead of risking their real money. With me, at least, I knew there was something wrong with it, but I just couldn't figure out what. But yeah, ChatGPT was able to take it and say, yeah, you're looking ahead at the next bar in this line right here. And then I changed it, and all of a sudden came back to reality. I was really
well, that's
excited for
really
a
cool.
second. Yeah.
That explains why you hardly ever ask questions on the forum. Um, but yeah, I'm surprised about the look at. I mean, it's very hard to look ahead in real test. The only way is to deliberately use a negative bar offset, or to like calculate a bar offset that ends up being a negative number.
And that's what I was trying to use some sort of anchored VWAP strategy,
Yeah,
and I
yeah,
and I was trying to find a low point, I think, in the chart, and anchor it to that. And it was, the way I did it is it offset it so that it
right.
knew the day before. But yeah, I was just very, very impressed that so again, if you're a real test user, I'll put in the show notes here the link to that. Feel free to use it and ask
Oh,
it
that's
questions
great.
like that if you ever.
I'll play with that. Yeah,
Yeah.
that's I've had a few users, approach me about that or show me things, but I haven't. At some point, I should really put it on my website and make it part of what's available. Probably save me a lot of support time.
Yeah, I'll
But
send it over to you for sure. It's been good, and so far it only has the next exercise to try to get the support form, which again I'm a huge fan of. Me and Dave talked about this. Our back testing video isn't out yet, but we talked about how I tried Amni Broker, and the forms there were hostile, to say the
right,
least. And then I came over to Real Test, and again, by reading the forums, everyone's super nice and everyone's super helpful. So I would like to, at some point, feed that GPT all of the support forms, and I bet you it gets even smarter after that.
oh yeah, I can probably get the discourse software to dump it out as a big file or something. It'd
That'd be
probably be easier than trying to do a screen scrape of all the posts.
that'd be great. Great. See, look, we're doing a podcast, we're chatting, and we're building stuff at the same time. It's
Yep,
fantastic.
I am sometimes known
Okay,
on the forum as Chat MHP.
so one more question from me. I was talking to, I was giving a talk at the local university here yesterday to some students, and they were asking about trading, and they said, what's the hardest thing about trading? And I think the hardest thing is having to reinvent yourself basically every so often, like completely throw out what you've done in the past and reinvent what you're doing. And it seems like looking back at your career, you've had to do that and done that successfully a few times. Do you have any advice for people that are going through that or are getting ready to go through that and they don't realize it, or adapting over time?
That is a really good question. I mean, I'm kind of at that point now where I, I feel like I need to reinvent how I trade, going forward. And you know, I've you were talking earlier about going back, or maybe Michael was, at looking at your former strategies, and I've typically when I hit a rough patch, that's what I've started to do. I have actually in the old 1.0 version of Real Test, there was a window called the system window that had a whole list of strategies, and you could kind of just go down it and run them one after the other. And so I would just kind of do that to just see, oh, has anything been working well recently? Uh,
Mm.
and just going through, like, if you run 20 or 30 old versions of a strategy, even if they're kind of the same concept with different parameters, and then just notice how many have had good results and how many haven't. That gives you a good feeling for whether the concept overall is broken. Touching back into that topic, but it's kind of, I mean, it's the same. It's I mean, personally, my answer is always comes back to iterative experimentation. I mean, that's kind of how I approach everything. Maybe it's because of trying to be a violinist. You just practice every day and you keep trying stuff. and you have to get into a feedback loop where you say, okay, this wasn't good for this reason. Let me try this instead. And so it would be the same thing with research. I just it's kind of a combination of persistent repetition and keeping your mind open. So you introduce some ideas from left field while you're doing that. But I don't know how to turn it in. I don't know how to turn it into like a checklist or a process or a set of guidelines. You just kind of have to show up and do it, and you kind of know it when you see it. In
Yeah.
terms of at some point you find something that feels like it might work. I mean, in the end, it's about getting to a point where you're confident enough to put your money into something that it's more likely to work than not.
Yeah, I love that. I love your idea about going back and looking at the strategy that was working at one point. It's always good to go back and review charts, I think.
Yeah,
Look at the ones where you made the most money, look at ones where you lost the most money. Doing a deep dive and comparing fills and really uh, doing hard research into something that has worked is always there's always good that comes out of it. There's always something you learn from it. And yeah, I think that's great advice.
yeah. You just have to always be aware of sample size in that exercise, because if
Hmm.
you get too fixated on two or three trades, generally it's random what happened with those trades. But I think it's useful to kind of quickly flip through a lot of trades, also, or if you run a whole series of tests like an optimization, quickly flip through a lot of equity graphs, and then cycle back around and go a little slower and zoom into something, focus on something. But yeah, certainly studying the trades of a system on charts that show the entry and exit points, and maybe plotting a few indicators if you want on those charts, and thinking about that can be helpful. Um, Most of the time we don't really know why. You can never know why any individual trade worked. That's kind of the
Right.
paradox of it. I mean, each individual trade is just part of the sample.
Yeah.
Yeah.
So
You.
it's really about understanding the sample, but somehow studying the trades is an important input to that, regardless.
Well, yeah. It's like you can't predict the next coin flip, but if you do enough of them, then you get what's gonna happen. But that doesn't give you an edge
All
on
right,
on knowing what's gonna happen
my
next, right?
my thumb just didn't have quite the right feeling on that flip.
Well, listen, this has been absolutely fantastic. I had a lot of fun. I hope you'll come back. But before we leave people, is where can everyone reach out to you? Where can they find your work, social medias, whatever you want to point people to?
My website is mhptrading.com. Uh, that actually has links to everything else, so that's the best place to learn about real test and see all links to wherever else I have a presence. This podcast will appear on there once it's released,
Oh, cool.
along with all the others I've been on. Um, so yeah, I'm on X, formerly known as Twitter, as
I'll still always
Mars
call it Twitter. Yeah.
Mars 10P, Mars 10P,
Yeah.
because I came from Mars when I was 10. Uh, and those are the main places. I don't ever tweet very often, but it seems like other people like to tweet about real tests, so I can be on there so I can like them.
Awesome. Well, again, thank you for coming by. I appreciate it. I know the users appreciate hearing from another systematic trader and a market wizard. So definitely, the more systematic traders we can get on, the better. Because I think a lot of people think it's just me and Dave sometimes, because everyone else out there is just talking about their fundamental thesis and what happened in the news and all of this. So it's great to show the people that there are some other nerds out there like us that just look at it kind of as a giant research experience.
For sure. Yeah, yeah. You guys are doing a great job on this podcast series, and I hope you keep at it. And I'm really, really glad to participate.
Oh, I appreciate it. We have a lot of fun.
Yeah.
We'll be around for a long time, I'm sure.
Great.
Yeah. Thanks for the comments there, Martian. That's great. Great to have you on and a great conversation. Thank you.
Thank you. Talk soon.
Bye.